Tesla is down about 6.5% today. Market is not closed yet, but it does seem like we could see price continue to pull back into that worst case support level that we talked about last week of $350. And what I want to do in this video is share with you guys how to understand market structure and how to draw these institutional buy levels on your chart so that this way you're not buying up here in an extremely premium market. You're instead understand when to wait and know around the levels where institutions are watching. Now, the very first thing that I want you guys to understand is we have to go all the way out to a monthly chart. No matter what time frame I'm trading, I want to know what the bigger time frame is doing. And this monthly chart here is the exact reason of why we were able to make such a killing last year, and specifically just Tesla alone making up for a huge portion of that. This is because back in June, we saw this wedge in play and we looked at the BX trender, the indicator at the bottom of your screen, showing higher lows. This is what's called bullish accumulation. When the BX trender starts to make higher lows and then it starts to move into higher highs, it is an indication that price is going to expand or break out. And this is why we were so bullish on Tesla in the first place, specifically back in June. And if you look at our profit and loss, when did we start making money on Tesla? Back in June. 6.7 was our first real trade, and then the rest of the profits came from there. And I haven't really been in Tesla since December. Now let's zoom in one time frame closer, which is the weekly chart. Still a very, very big time frame, but one that we should keep an eye on at all times. You're going to see right now the BX trender has been making lower highs, which is a sign that money is being pulled out, and now making lower lows. This is not an indication to short, but this is normally an indication to sit back and wait and see if price will pull down into a discounted range. Now, the way that we find the discounted range is we go into the daily chart, and we want to start marking off lows. We have a major low down here of $214 and a main high of $479. This is basically the range that Tesla has been trading in for the past 6 months. And so if you're buying down here at the bottom of this range, you are buying at a major discounted price. And if you're buying up at the top of this range, you are buying at an overinflated price. Now, in a perfect world, we would take our Fibonacci retracement from swing low up to swing high. If you want to learn how to set this Fibonacci up, you can go into our free course library down below and click on the Smart Money Mastery course, which was about a 30-minute course showing you how to draw these and set up your tools just like mine. In a perfect world, price would come all the way back down into this 0.786 and 0.826 level, which is the smart money zone, and we would bounce from there. Now, to be quite honest, I don't think that there's a very high chance that that is going to happen. In order for this to actually pull all the way back down there, it would have to kill the monthly breakout, which is currently in play. And if it kills the monthly breakout, then I really don't want to be trading this anyway, which means that instead I want to go up to the next recent low, which is going to be right here at $310. We're going to take that Fibonacci from 310 up to highs, and you're going to notice that the golden zone or institutional buy zone is sitting here between 350 and 380, and the smart money zone is sitting between 350 and 340. This means that on a smaller time frame, if we are buying within this blue zone, we are getting a discount. If we are buying within this purple zone, we are getting a ridiculous discount. Now, what's even more important is if we actually go in on a 1 hour time frame, we can look at smaller time frame market structure. One of the reasons we didn't think that this breakout on Tesla was going to continue back in January is 1, because the weekly BX was showing lower highs, but 2, market structure was showing a bearish setup. Remember, when market structure is bullish, it will break out into highs, pull back to make higher lows, and then break out into higher highs. The opposite is said for bearish market structure. Price will sell off, bounce into a higher low. This is usually indicated by that institutional sell level and where you would want to short. It will normally sell back off into lower lows. It will normally bounce back into that smart money zone and then continue to sell off into lower lows. And this is why I've been pinpointing this price, worst case for Tesla, down to $350. And the reason I think 350 is going to be the low is because in most cases, there's so much buying pressure in this support that price will actually come back up and take out the most recent high, breaking this downward structure because we're no longer making lower highs, and instead come back to make higher lows and then break its way out. So I still think that there's a very good chance that Tesla could be back up at $600 by the end of 2025. But we can't rule out the possibility for more blood on Tesla for the next couple of months. At this point, I don't have any positions open. I think one of the smartest and safest things to do here is to sell cash secured puts down to $350. If you go to the free course library, we have a cash secured puts course. Basically, what happens is you sell a put to a bear at a price you would be willing to buy Tesla at. So let's say $350 for doing that. And then worse comes to worse, if Tesla drops to $350, you just are forced to buy shares there within a very discounted price range. I hope this video helped. More than anything in these types of trading scenarios and environments, we need to just remain patient. And I want you guys to look, right? If we go back and just look at our profit and loss last year, we weren't going up all of the time. There were multiple times where we made most of our money within a 1 to 2 month period and then consolidated for multiple months, and even had multiple months where we lost money. Because at the end of the day, we can't force the market to break out. I would love for Tesla to break out, but I have to do what the market is giving me, and I can only respond in a specific way. And so I hope this video helped. If you guys want to learn my exact strategy for free, the link to our BX Trender course is down in the description. It goes over exactly how to set up all the indicators that you see here. Our 11 courses and our free course library is also down in the description, teaching you smart money zones, how I trade options, risk management, etc. And if you want to trade with me each and every single day, get access to my trading bots as well as our Discord community, the link to our private mentorship group is down in the description.